Welcome to ECN Trade Daily Video. Before we begin, it should be noted in consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, late last week the Australian dollar took a turn for the worst as the bears gathered in a great many numbers. Called its lowest level since February 2016 at 70.97, with only a slight rebound from this morning's opening. At present, I'm looking towards 70.60. Now, with the level of 71.40 crushed, I do expect to see further weakness to the target now, seen at 69.40.80, which is the objective. The euro also took a tumble very heavily and now looks towards the support at 115.20.30. Now, the euro had little hope to regain its bullish charm after the US dollar gained bullish traction on a better than expected jobs and wage growth data release, or the non-farm payrolls, late Friday, which indicated that the US economy would be able to deal with a faster pace for the Federal Reserve rate hike. The US economy added 201,000 jobs in August, above forecast of 191,000 new jobs, while the unemployment rate unexpectedly rose from 3.8 to 3.9, the Labour Department said in the US. The Federal Reserve view that a tighter labour market would lead to wage growth, increasing inflationary pressures, was validated somewhat as the average hourly earnings grew. With a quarter-point rate hike already locked in for September, the fact is that the market will probably look further beyond there and look towards December as not penciled in now, but penned in or inked. Along with this is that President Trump said on Friday that he's raising the stakes to his challenge that the world will line up behind him with the US to take on the China over trade wars. Trump said on Friday that he was willing to slap tariffs on an additional $267 billion in Chinese goods, along with that on top of duties of $200 billion in imports, which is already considering. From a technical perspective, that is, any rally beyond 115.95.05 is seen as a potential sell, with further caps above there at 116.75 to 117.55.65. However, with the technical implications coming down, and especially with the MACD, does give further scope that a break of 115.20.30 would open the way towards 113.70. I have little to say about dollar yen as it continues to trade sideways and consolidates within this 110.5 to 111.5. Nevertheless, the market is back above around the 111, and therefore I am not supportive of any bullish moves as to the start of this week. With the RSI under the midway point, I do expect to see weakness towards 110.75 or even down towards the 110.05.30, around that level, and reassess from there. Well, the pound took another stab and left a shooting star this time on Friday, and from the rejection of 130 figure 40 area gives further scope that a further downside test may emerge. Now we need confirmation to the shooting star, and a break of 128.80 will give us that and expose the region of 126.60.80. What started all this off was the news from the weekend that the Prime Minister Theresa May Brexit deal wraps a suicide vest around the British Constitution and hands detonator to the European Union. This was stated from former Foreign Minister Boris Johnson in his comments that drew strong criticism. In an article in the UK Mail on Sunday, Johnson pressed his attack on Theresa May, the so-called Chequers plan to leave the EU, calling it a humiliation that opens ourselves to perpetual political blackmail. It's not very good for the pound from these accusations. A break of 128.80 will give us further confirmation to the bearish case. Until then, we shouldn't rule out one more test towards that 130.15 to 130.40 area. As I say, a break of 128 is the bearish case. I don't have much to say, and I'm neutral on gold as it continues. Until we get a fall or some type of rally to support the technical outlook, then I will rather sit on the sidelines and wait for a better view for gold. And to wrap up with oil, the market's fully broken down, with this slight hammer that's in play could see a recovery, but the technical implications is not supporting it this time. So until we get some change in the technical pattern, I believe the market will take another challenge to $67. Now, a close beneath there will give further scope to the downside and bring in a target of 65.80 and lower to 63.5 to 62. Resistance seen around. As always, look out for the intraday report, and I hope you enjoyed a great start to the new week.